is me live and unplugged, answering questions from you from an Ask Me Anything. And I've got questions from Real Vision Pro Crypto members, and I've also got questions from YouTube, and I'll be answering those. If you want to ask questions on YouTube, you have to subscribe to the YouTube channel. Again, I'm not doing this for free. Well, I am, but you need to subscribe to the YouTube channel. That's the idea here, because we produce incredible content, including the Real Vision Daily Crypto Briefing, that is really one of the best crypto shows in the world, and it's every day. It gives you the analysis that you need. So what are we going to do? Oh, firstly, obviously, because it's my show and I get to drink wine doing it, today I've got a Rioja Reserva 2005. So I shall be enjoying this while answering questions for you. And there was clearly a shit ton going on in the crypto markets. I'm going to give you my top level view at first, and then I'll dig into questions. So top level is, above all things, it starts with the macro, and then we'll get into the more specifics later, because that will come into your questions. The macro for me has been, are things turning? Is inflation coming off? And is therefore the rate of change of rate increases going to reduce or not? So my view is that we've seen the peak in CPI. The market's starting to realize that they've been overestimating CPI, range of interest rates that matter, whether they do another 50 and another 25 or another 50. Either way, we're getting towards the end of the rate cycle where they will pause. The pause is enough for the market to perceive it as the lack of pressure holding this balloon underwater. And when you take it off, the balloon can rise. And we've already seen the equity market take that well. I don't believe that that means if the equity market's going up, inflation's coming back all over again, we're in a big mess. I just think the Fed just stay on pause and wait for inflation to fall below the Fed funds rate. My guess is inflation will be below 4% sometime around February, March of next year. And in which case, if it continues to fall, which is my base case, in fact, I think inflation goes negative, then we will see the Fed eventually pivoting and going to rate cuts instead to stimulate. But that game is to be played for. Right now, it's a matter of the end of the macro story and liquidity coming. The global liquidity cycle is currently led by China. Chinese liquidity has turned up, and I put a tweet around this amongst all of my macro crypto views. Chinese liquidity leads, global M2 should follow. And as we start getting through the liquidity cycle, liquidity is one of the key drivers of crypto. So that's the basic cycle. Where we are now is the liquidity cycle has now met the bottom of the exponential trend, the adoption trend. And that becomes an extremely interesting time to focus on accumulating crypto. What also happens at the bottom of liquidity cycles is things blow up. Less money around means those worst borrowers and people who have abused capital tend to blow up. And we saw that starting in June in the crypto markets as the centralized finance part, the CeFi part of crypto, blew up as credit became less available, and you start seeing who's swimming naked when the tide goes out. And there was a whole bunch of people swimming naked. What we didn't realize is there was a naked whale, and the naked whale was FTX and Alameda. And that was something where it appears from what we know that Alameda went bust in June. And out of that, they tried to paper over the cracks with customer money to hide the issues, because it would have brought down the exchange anyway because of the tie-ups with the FTT token. And then this whole thing gets exposed by CZ, but really the market needed to know this stuff. So that's where we went in June, but I don't know yet. Could it have a further spike back down to 1,000? I don't think it takes out the 700 and whatever low that we had, but let's wait and see. So, okay, I'm going to start asking some questions. Firstly, from the pro macro community. And pro crypto, sorry. So from Bumbu, who I speak to quite a lot on the Discord, his question is, FTX Alameda failure is on everybody's mind. The contagion does not seem to be contained. What other failures and market adjustments could we expect how much long could this take to play out? I have a slightly variant view, but you can't have much confidence. I think most of the bad leverage was taken out in June, and this was the final part that should have happened in June but didn't. So what are the knock-on effects? Well, normally if Alameda had gone bust, the knock-on effects would have been Celsius and BlockFi, etc. They already went bust. So we've got the knock-on effects of FTX having bought them and then can't fund them. But I think that was a kind of known failure. So is there somebody bigger here that is yet to get knocked on? Some people have looked at the banks like Silvergate. It's possible. I don't think that it's systemic for the banks in that respect, the crypto banks. I think the markets have been less aggressively pricing the downside. It's difficult to short the markets. A lot of the hedge funds won't use Binance, for example, because they can't get it through compliance. And a lot of the other products aren't available on the other exchanges. So it's kind of muted the market, which is why it's been so quiet. But there could be other shoes to drop. I don't know really who they are or what they are. People have been looking at Genesis, Jump, and the other market making firms. Is it possible? Well, they've all said no, but as we know, that means nothing in this world because everybody says, no, we're all fine. We're just going to have to wait and see. But I am biased towards, if there is another sell-off, you want to start aggressively adding into it because the macro cycle is turning. And I think this is the final phase, the capitulation phase. And, I've been around this market since 2013. And I've been through all of these and I've seen all of them. And the sentiment is as shitty as I've ever seen it for obvious reasons. A lot of people have lost a lot of money being caught in all of these kind of fake crypto, which is, they're centralized, they're opaque, they lend your money out in ways that you don't understand to give you a yield, which you're grateful for until you realize that you've had open-ended risk on the back of it, which is one of the reasons I've said 5% of my capital at risk, and I got a wrong bet and I lost that 5% in the call options. Totally defined risk. So it's defined risk taking, and options are great for leverage like that. They're not easily available in crypto. Foreigners can use things like Deribit. Now, LedgerX, which was the US version, is all tied up in this bloody Sam Bankman-Fried mess. So I don't even know how that's going to work. And that's another issue for the hedge fund market. There's no option market unless you can trade offshore. So it's really complicated out there. But let's wait and see. But don't use leverage. If you do, use call options, but you still have a risk the exchange goes under and you might not get paid back, even if you win. So just be careful with this stuff. Don't risk your life on it. And don't use yield unless it's staking yield and you understand you're taking the risk in the underlying protocol. So let's see how much longer it takes to play out. The answer is I don't know. Market could have rallied today, didn't. So, maybe we've got the other leg lower. I think people want lower. I think there's a lot less buyers around right now, again, because a lot of hedge funds have got their positions trapped. I run an asset management business that invests in hedge funds. We had one that got trapped.